The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour. And what do we got today? Well, we're a little bit off, very close to actually making some big signals in the market. So we'll see what happens out here. Last couple of days, I'm going to say probably some market indigestion, but we shall see. Anyway, what else do we have? Well, let's take a quick look at volume on the push up to 4,000 on the S&P cash today. 6.7 billion shares, so that's pretty wimpy as we went up. Of course, the Fed next Wednesday. Earnings other than, well, we'll look at them, but it really earnings other than the healthcare providers, where a huge amount of folks are not taking elective surgery, so they're being able to pocket huge amounts of cash. Pretty poor, but we'll go through some of those. Give me a call today, 877-927-6648, and we'll see about the rest. Anyway, what else? Oh, path@tfnn.com if you want to send me something. But I had some interesting questions today to send out an update for subscribers to the Path of Least Resistance. And I have an update brewing on the Tech Insider. So look for that across the next hour. I'll probably get it in the next break here. But I think we're getting some fairly decent signals in the market finally. So we shall see. Anyway, earnings continue unabated, but we'll handle those in a little bit. Had some questions that I wanted to get to early. One I said I would answer on the air, a subscriber question about what they were talking about. And it really didn't have so much to do with the market, but the way you should think, at least statistically. And when I was growing up, and I'm sure many others, there was an ad for peanut butter. And the peanut butter was pound for pound, peanut butter has more protein than steak or meat or something else, right? Well, that's all good and well, but when's the last time you ate 16 ounces of peanut butter and didn't spew it all up? I guess you'd have to be on a bet. So let's not get with false equivalencies out there, but I always remember that one. I think that was one of my statistics classes. That was one of the first things that they brought up for that. And anyway, the question that I responded to was that I thought that they were making a false equivalency, apples and oranges. It's all good and well, and it sounds good, and it was written by somebody that, they repeated that for at least 15 years that I can remember. And, when you repeat something long enough, it's hard to tell the difference between that and truth, or at least something that is meaningful. But certainly that's what I'm thinking out there. Just, Winston tastes good like I don't even have to complete that, and you're going to repeat the end of it if you're of a man or woman of a certain age. So just thought about that. Pound of peanut butter, medium rare, sir. Medium. Well, you can't even eat peanut butter. Yes, that's true now. You'd be run off the rails as somebody that was attacking somebody, unless they have a allergy. But that is true. Now, engineering, a short squeeze. People have always asked about this. And this one, why I don't have any inside scoop on it, I will bring up a very interesting setup in the market. As I said, you got to be pretty stupid to be short a stock that's $2. The risk reward is just the opposite of shorting a stock that's $50. You may have a 1-to-1 at $50 the stock goes to 100, but at $2, the best you're going to have is it goes to 0. And the downside is something like this monster here that was $2.42 3 days ago, and now up to $12.96. Well, you look at it and you go, okay, this thing's got 4.5 million shares. And you know what? It only has 150,000 shares that are short. Well, again, let's not mix our steak with peanut butter. You got my steak and my peanut butter. You got my peanut butter and my steak. Yeah, I don't think that would have worked as good as chocolate in my peanut butter and peanut butter in my chocolate. But that's why I'm not in marketing. Anyway, back to PGY, this Pagao. I don't even know what these guys do. But I did look through the data and did run up some stuff. What do these guys actually do? Financial technology company in Israel develops and implants proprietary artificial intelligence technology related to software solutions to assist partners to originate loans. So apparently a loan cannon. They can fire it at will. Let's see what we have back here. We have somebody on the air, which I'll get to in just a second. Andy in Colorado. Let's go to you and give me a full report.
Full report is I don't know if I should accumulate more Verizon at this level, or would it be a good entry point for someone that's not in it yet, even after they miss their earnings? How are you doing today, Dave?
I'm doing great. Well, you blew out the previous low of 44.98 that had 33 million shares, and you got 40 million shares. It looks like it's going to close under that low. So just depends on whether or not you're a falling knife or a javelin catcher. I don't know which one you'd rather want to be on the opposite side of. It doesn't seem like a long futures involved in that particular realm, but you've got all the signs out here that this is horrible. Now, you got two big gaps lower, right? Mm-hmm. So if you listen to the show at any length of time, what would I say that the next thing would probably happen?
Gaps get filled.
Yeah, but what after two gaps, what happens?
Oh, please remind me.
Third gap about 80% of the time.
Oh, okay.
So you got this big gap from 49 to 47.50 or so, 47.75. You got the next gap down that started this morning, and you got a big bar. You've blown through the lows with volume. So why don't you hang on here? When we return, we'll talk about that. But about 80% of the time, you should look for a gap about the same as the two previous ones before you make a low. We'll be back in a minute with Andy. About 5,000 feet above sea level.
In a time of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve in a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors. Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And this is when I've got to do something live on the air. I don't want to record something. I want to path update sent, number 2. There we go. Okay, so let's go back. Do I have... Let me close this window here. I have checked my texts. Andy, are you still there?
Yes, sir.
Okay. So anyway, 2 gaps, about 80% of the time, at least in my experience, leads to a third gap. Now, generally, on a huge move down, I will almost always say that while you may get a bounce, Wyckoff called it a automatic rally. There's no preparation. You really don't know. Maybe you make some money. Maybe it falls out of bed. The idea is probably when you do think that it's made some kind of low, figure 4 weeks or 8 weeks to get all the weak hands out and all the people think it's going to bounce and then they're going to sell out of it. And then generally you can come back in and maybe see some trading on it. I'm not a big fan of betting on the automatic rally. I much would rather see the automatic rally go up, come back down on light volume and tell you that all the weak hands are out of it. Does that make sense?
Oh, yeah. Yeah, definitely. Thanks, Dave.
I'm just, your batting average is probably going to be higher. Do things bounce? They do all the time. Can you know where they're going to go to? No. You really know a lot more after the bounce and then the pullback to the lows. So we'll see what happens, but I almost never touch a stock with 2 big gaps down. It's just been a death sentence to me in the past going long on those. And a lot of times you'll get 2 gaps like this, and the third gap maybe 2 weeks or 2.5 weeks down the line, right? It doesn't have to happen instantly, but you'll get that third gap, and then that actually sets the low. So could you get back up to $46 or something in the next week, or maybe $46.50 back into the trading range, and then you get one more huge gap down. And I would rather look for another stock than play with one that has two gaps and waiting for the third shoe to drop. That's a good mixed metaphor there, isn't it? The third shoe.
Sounds good.
Maybe
Hey,
it's a horse.
Dave, fundamentally, what do you think may have happened for them to miss their earnings by a penny there?
Yeah, I don't know. A lot of times I'll look at that stuff during the weekend. I don't like to get too embroiled with the fundamental stuff. In the short term, all that matters is people selling and buying. In the longer term, it's good if you're looking at buying or selling something before all the actions happened, so you kind of know the underlying part of it. Once the war started, as Mike Tyson once said, everybody's got a plan until they get punched in the nose.
Right.
And then those plans are out the window. And at this point, I think all those plans are out the window. You want it to settle down and get to the point where you can figure out what's going on. My belief, and we've talked about it for a long time, is just how much money these companies have to spend going to 5G. And, I think, who was it? Was it Sprint last week just closed down, or 2 weeks ago closed down 3G. And they were actually giving people new phones that complained with 4G phones. And those 4G phones will probably be off the line in a year and a half, too. And all we'll have is 5G systems so that they can upsell you to other stuff. But I'm just not a big fan of that right now. They're in a big spending cycle in what is probably going to end up being a recession. No one likes big companies that have lots of infrastructure spending money in a recession.
Yeah, okay. Yeah, that makes sense. Totally.
So generally what you want to find is stocks that have huge return on investment, right? Like chip stocks, that kind of stuff, off some kind of low. Because the huge investment only becomes bigger with higher interest rates. So there's a lot of stuff working against these guys now. Huge rollouts of infrastructure, higher interest rates, legacy stuff that they still have to support for a little while before they get into the higher paying 5G stuff. But it's just my opinion at the moment. I'm not a big fan of what you want to do is once these guys really have the infrastructure laid out and the spending kind of wanes, that's when they really start reaping the whirlwind, right?
Gotcha, yeah.
So when everything's 5G and no one's even talking about 4G anymore, they'll probably spend all their money, and then it'll be time to move.
Okay.
Okay?
All right, well, sounds good, Dave. I really appreciate the time. Have a great weekend.
You bet. Thanks. Okay, let's go back to my question about engineering a short squeeze with... Oh, I forgot to... I actually took that down. Hang on, let me do this. What was the name of that stock? PGY. If you want to know how to engineer a short squeeze and you haven't read Reminiscence of a Stock Operator, that's great. But anyway, stock with 4.5 million shares outstanding. Problem is that only about 350,000 of those are in the float. 150,000 of those are short. So from what I read, and I haven't been able to independently verify this, what happens if all those big holders, the CEO and the rest of these guys that actually have tradable shares, decide to take them out of their margin account and put them back into their own account? Where are those 150,000 shares going to go? Well, this is how you engineer a short squeeze. And as they say, who was the guy? Barnum and Bailey? Was it Barnum or Bailey who said a sucker's born every day? Well, not only have to look at how many shares are out there compared to the shares short, but what is the float? And when you got some kind of ridiculous small 350,000 share short float, and 150,000 of those, half of it, are there, and the vast amount of those shares are owned by a bunch of guys that are the executives at the company, generally you'll have some smart pencil pusher come by and go, it'd be real tough, wouldn't it be, if all these short sellers had to buy at $12 instead of the $2 this thing's at now? Just move all your shares over, and we'll start a little smoke, and then there'll be some fire, and then there'll be somebody that bought something for $2 or sold something for $2 that has to buy it back at $14.17. So engineering a short squeeze, a good master class on this today. Watch out for the actual shares in the float. It's very important. We'll be back in a minute.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
And we are back like a bad rash. Oh, we got to do a little history. We haven't done that yet. So we'll get into that. But it's all a little bit of history repeating. Mostly it rhymes, though.
Then it's all just a little bit of history repeating.
A lot of people that trade technology, I think, would be well served to buy a book called, what is it? Now I'm having a mental blank. Revenge of the Tech Nerds. No, it's Accidental Empires by Robert X. Kringley. Robert was a columnist in a magazine, kind of magazine for the industry that started probably about 1975-ish, I think. And it was it CompuWorld? And now I'm starting to remember. I remember the big deal was that he had a fax machine, and anybody wanted to rat out their boss doing stupid stuff in tech, you could fax him stuff. And, of course, it would be in the Friday edition, and they mailed it out so everybody got it on the same day or pretty much around the country. So every Friday I was always looking in the mail for my copy of that. I want to say it's CompuWorld. Yeah, I'll think of it in a minute. Anyway, if you really want to understand how technology works, his book, Accidental Empires, really tells the inside story of all these people that you think are absolutely brilliant. And a lot of times they were just standing on the train tracks when the train hit them and took them with them. And, of course, in 1980, on this day of our Lord, representatives from IBM, from Boca Raton, fly up north and try to have an interview with a gentleman, and he's gone, and his wife gives him the middle finger. So they walk across the town. They probably had a rental car, and went across town and started talking to a young snot-nosed 17-year-old, I think, at the time, maybe 20-year-old. He was right in that area, who went to Harvard early and quit to start writing software, as so many of the people did at the time, i.e. went to college, gave up fairly quick, and decided to go make billions. Anyway, he shined him on. You could tell that Bill was a pretty good Barnum and Bailey type guy back then. They were talking about needing an operating system, and he, of course, Bill Gates had been writing BASIC for some of the other machines out on the market, like the Apple, Altair 8080, and some of the other very early machines. So they stopped by since they were up there anyway. He had a good friendship with a gentleman that had written a version of CP/M, which is kind of like DOS, kind of an early version of DOS. And he knew that the guy wasn't really getting a lot of money off of it in sales. So Bill shines him on, shows him basically the CP/M operating system, says that he can adapt it to the machine in 30 or 60 days, and signs a contract with him that day, and they fly off. Bill later that day goes over to this guy, offers them a big deal. I think Bill actually borrowed the money from his dad to pay this guy. Years later, I think it finally got settled in 2002 or 3 for his company, which is Digital, I want to say Digital Research at the time, and made the money. Actually, I think got $20 million after all those years, and originally only got like up to $1 million. So, and of course, Bill Gates, billions and billions. If you're a big fan of, what's that guy's name now? I'm having mental blanks all over the place. 877-927-6648. 50,000? Was that what it was? Digital Research, all I remember. I have to go back and read the book that I recommended. 50,000. I think it was 50,000, and there was some writer on it, because I remember in the lawsuit that he had made basically up to $1 million. I think it was $50,000, and then a part of a royalty for everything sold. And so he ended up with $1 million, because I remember the settlement in 2002 or so ended up being $20 million after the lawsuit. 877-927-6648. Okay. Anyway, Accidental Empires. Yeah, we'll handle that on Monday. I think we've gotten into that. Let's go ahead and start looking at some of the others out here and see what else. So what are we at here? What's updated? So we're getting a little bounce out of here. 393.63s on the SPYs. 39.47 on the S&P cash. Dow's down 228 at 31,808. Nasdaq's off 268. Russell's down $40. Crude oil down 155. Gold maybe a little off the lows out here. Not a very inspiring bounce. Up $6.50 today. But of course, one of the biggest winners was Great Panther, I think. GPL. Is that it? Okay. Now let's go back to what I wanted to talk about, which is earnings overnight. And of course, probably been talked to death about Snagit, but a big miss. Is it Snagit? Not Snagit. Why I got it. Change there. Snap. Excuse me. And I wanted to say Snap, Crackle, Pop. And of course, about 30 minutes after that, I saw a headline, Snap, Crackle, Drop, which is probably a little bit better than the one I came up with. But I always wanted to ride those little pithy headlines. I thought that would have been a good job for me. So what are we doing? We're blowing through the lows on a monster gap. And here's why I severely hate gaps that are not filled on longer ones. Again, if you have a big gap, you're probably going to get a second gap, and you're probably going to get a third gap. But we have a monster gap from about, $74 down to about 59. That was actually a double gap that got gapped over. And I love this feature of Art of Timing the Trade charts that shows multiple gaps with various translucent features. We got the second big gap down, and we got the third one in here today. And that's why I stay away with stocks with huge two gaps, because 80% of the time you're going to get the third. And you don't, unfortunately, it's not like you know exactly. But this goes back to the Verizon call before. The last big gap was May 24th. You go sideways, you go up to 1655, and then it falls out today. And that's why I'm reticent to ever go after a stock with two gaps, because you almost always get kind of the same thing. Sometimes they're bigger, sometimes they're smaller, but they're almost always in your heart a killer if you're long. Yes, oh boy, I couldn't remember. Thanks, John from Philadelphia, otherwise known as Z in the Den. Billions and billions is what I was thinking. Be back in a minute.
TFNN has been your trusted source of analysis for bonds, metals, stocks, commodities, and options for years. And we are happy to announce that we are bringing that same caliber of analysis for the Forex market. Teddy Keckstad has 30-plus years of experience in Forex trading, commodity risk management, Forex hedging, volatility, and so much more. Teddy releases his weekly Tiger Forex report every Monday morning with elite coverage of all major currency pairs, including the DXY, Euro dollar, Pound dollar, Aussie dollar, dollar yen, dollar Swiss franc, and so much more. Teddy will recommend specific trades when the market presents them and provide updates throughout the week when warranted. For the month of July, inaugural members to the Tiger Forex Report will receive 25% off the monthly subscription for as long as they're subscribed. Just use promo code TEDDY25 to lock in the added savings. This offer is good only for the month of July, so do not miss your opportunity to save on the Tiger Forex Report. TFNN, educating investors.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
And we're back. As I said, biggest winner of the day, Great Panther Mining, had a huge move relatively, but I don't know how many people were in a 10.5 cent stock that went to 14, but certainly you got the spike out there today. But interesting nonetheless. Of course, the ones that you probably could play are the healthcare stocks, and as we said on these, all as they came off, everybody was expecting people to go back and start getting procedures. Well, everybody's still avoiding going to the hospital at all, and I can understand why. And of course, the premiums just continue to go up, but the payouts continue to stay low. So healthcare provider HCA BAFO move out here today, up 12%. A little less is THC. I always said that these guys could probably make more money in the world if they would sell their ticker to some marijuana company, THC. But I do digress. I think there's some money in that, and their symbol doesn't really matter. But I bet somebody would buy their symbol for a lot of cash. Tenet Healthcare, of course, up about 7.5% on the day. This one had a big gap, kind of a minor-ish gap at about 72. One more big gap down. And this is kind of the pattern. If you're looking for three gaps, I would have liked to seen the middle gap a little larger, but still significant. And all that really happened was the sell-off really continued the rest of that day. So this actually kind of masked what I think. If I remember that day, it may have opened up there and spent a couple of minutes and then went straight down a handful of bucks almost instantly. So that candle even may be a little bit of a misrepresentation, although it did gap down and went lower. So you got kind of the outlines of a three gap play here, and then this to the upside. But I'd keep an eye on this. And again, unless we start seeing people go back into the hospital in droves, you got to think that this is the best of times and the worst of times. Probably the worst of times for a hypochondriac, right? If you go to the hospital, maybe you catch the big C bug, like the Prez. But man, you can't be going to the hospital all the time. You will catch something. So kind of a real catch-22 if you got issues with thinking you're always sick. And of course, those people now, it's probably 10 times worse that they can look up all the different things that can go wrong with the human body on the internet. Because I believe in self-diagnosis, but certainly, and of course, if you don't know, that's tongue-in-cheek. But certainly a nice move. Probably the issue if you get back down lower on lighter volume, if we get more of the same, i.e. more kind of saber rattling in the virus world, these guys could continue to outperform the rest of the market. I would say that you want to be short these as soon as it goes away, and I think a lot of people sold these off thinking that would happen, and were short them, but on the wrong side of a brown stick, if you know what I'm talking about. Schlumberger, a little bit of a surprise for me. I wasn't expecting a 4% move, but certainly got a little gap up. Probably everybody just a little bit too bearish on these offshore drillers, but he gave some of it back. You really just to the gap down from the 5th of July on it. But some decent volume on the pop today, and maybe a little bit oversold going into these. Some of the other ones that I wanted to take a quick look at is AXP. And you've got that. Got two gaps. This is what always bothers me. You got still two gaps, and those gaps are probably not really getting filled today. We'll see how my algorithm goes after them. But you got a gap inside a gap, and you haven't quite filled this gap above it, and you kind of came back down. A lot of times it's not surprising to see one more gap. Now the question is, can you say this gap down from the gap up? And there is that third one down there. You could make a case that is the third gap. But certainly, you get back to 147 on light volume maybe by fall. Might be interesting. Got a question about Twitter. I don't know how you can do anything about this. I tend to purposefully stay away from stocks that are in the media a lot, because there's always some kind of story, real or imagined. And generally, when you go to the poker table in Las Vegas, there's a saying, and that is you don't want a donkey at your table. You want somebody that maybe knows the rules, not a first-time player, not going to do something stupid, because those guys just as often as not will take you out with bad play before you can get to the good play. You want someone just smart enough to think that they're smarter than you, not somebody that doesn't know the rules. Those people are called a donkey, and big media spotlights tend to draw the donkeys out for retail traders. And of course, they're always the big men of the street are there to flog those folks out of their ill-gotten money as quickly as possible. So I tend to stay away from it. Headline risk. I tend to look at stocks that probably have a little bit less media glare out there. But you got 4 days going sideways. I don't think there's a lot you can read into that one today. Walgreens Boots Alliance down to about 5% today. And see, down 5%. 73.98 the last move. You did open up fairly good and then sold off on this one with some volume. So people still, and of course this is Walgreens and Boots. I don't understand the Boots part of it. Maybe because we don't have them around here and never did, or maybe Boots was something else. I don't know anything about Boots, but Walgreens. Oh, this is Western Alliance Bank Corp. I thought it was Boots. Maybe it's the other one I'm thinking about. That's it. Anyway, on the thing, this one kind of gave it up back down to the previous gap. So never mind. Mattel down about 6%. MAL. We look at that one. MAL, right? MAT. Okay. So we'll look at this when we come back. We'll finish up with a couple more.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we get ready to wrap up another big week, we had a push to 4,000. Volume never really came in. We're off about 52 points on the S&P off that high. We're going into next week, which I think is going to be rather weak on the Fed announcement on Wednesday. I think people are whistling past the graveyard of thinking that they will not raise. Now, the question is whether or not they will moderate the talk now that some of the stuff has come off. I think until everybody quits trying to buy every low, they probably will not back off very much. Maybe their talk is slightly more dovish than bullish next week. But I suspect we've probably made some kind of high and may not find some kind of low until maybe the first week of September. So why I don't think it's going to be a huge 100-point gap down on Monday or anything like that. I would worry about getting frog boiled over the next 5 to 6 weeks until we come into after Memorial Day, right? Or Labor Day. It's Labor Day. I always get those confused, probably because I just know we're off and I have to think about what actually is happening. But yeah, Labor Day, Just everything looks like it could just have this big, long drawdown until we get out to there. A lot of other issues in the news that make me think that things are probably going to get worse before they get better, and people will react to that. But, we really never had the huge shorting at the lows. That's almost always a companion for finding something. So does it rocket to the lows? Maybe, maybe not. Do I think it goes there? Yes. Sell when you can, not when you have to. We'll see you Monday, same bat channel, same bat time.
Building wealth trading in the stock market seems impossible to